Hey everyone, welcome back to Financial Market Insights for Traders, where we cut through the noise to bring you clear, practical, and powerful strategies to help you grow as a trader. I'm your host, Sophia, and today's episode is a big one. We're diving deep into the silent saboteur of trading accounts everywhere: fear. Not just the obvious fear of losing money, but also FOMO, the fear of missing out, and all the sneaky ways emotions can hijack your decision making, drain your confidence, and blow up your trading plan. Whether you're a beginner or you've been at this for a while, this episode will arm you with the tools to master your emotions and reclaim control. Because trading is 80% psychology, and if you don't get your mindset right, nothing else matters. Let's get into it. The real cost of fear doesn't always shout, it whispers. It causes hesitation. You skip trades you planned for. You exit early and miss profits. You start second guessing yourself, and slowly the doubt creeps in. Now let's talk about its cousin, FOMO. You see a stock spiking or crypto pumping, and you feel this pressure. I can't miss this. You jump in without analyzing, and boom, the price reverses. Two totally different emotions, same outcome. Poor decisions, lost money, and worse, shaken confidence. And here's the brutal truth. The more this happens, the more you spiral. A couple of bad trades become a pattern. That pattern becomes your identity. And before you know it, fear is steering the wheel every time you look at a chart. But here's the good news. You can take back control. You just need to start treating your mindset like a skill, something you train and strengthen. Common psychological traps in trading. Let's break down the most common traps traders fall into. Recognizing them is the first step to breaking free. First, fear of losing money. It freezes you. You see a good setup, but you hesitate. You think, what if this one fails too? So you don't take the trade. Or worse, you enter but bail out early, even though your stop loss is still intact. Then we've got FOMO, fear of missing out. This one's sneaky. A coin pumps 10% in 15 minutes. Everyone's tweeting about it, and you feel like you're about to miss the next big thing. So you chase it. No plan, no edge, just vibes, and then you catch the top. Sound familiar? There's also revenge trading. You take a loss and immediately try to make it back with another trade, usually rushed and reckless. Overtrading is another trap. You're bored or trying to make your day, so you take subpar setups. It's not part of your plan, but you convince yourself it might work. And finally, analysis paralysis. You overthink everything. You're waiting for the perfect signal, the stars to align. You miss opportunities because you can't pull the trigger. These traps don't just hurt your account. They chip away at your identity as a trader. So how do we fight back? Investor psychology trading tips that actually work. Here's how to get your head straight. Stay sharp and avoid the emotional roller coaster. Number one, have a plan. I know it sounds basic, but most people skip this. You need a clear, written trading plan. That includes your entry rules, your risk management, your stop loss criteria, and how you'll manage the trade. When emotions kick in, and they will, that plan is your anchor. Number two, limit your risk. This is a big one. Never risk more than 1 to 2% of your total account on a single trade. That's not just about protecting capital, it's about protecting your mind. When you know the worst case scenario is manageable, you don't panic. You can stay calm and think clearly. Number three, always use a stop loss. Set it before you enter the trade. Don't move it unless your plan says to. A stop loss isn't failure. It's a boundary. It frees your mind so you can focus on the next opportunity. Number four, journal everything. Not just your trades, but your thoughts, your emotional state, and your decision making. Did you stick to your plan? Did you chase? Did you panic? Over time, you'll see patterns, and that awareness is powerful. It's how you grow. Tip 5, detach from the outcome. You're not going to win every trade, and that's okay. Your job isn't to be right. It's to make high-quality decisions based on a repeatable process. Focus on the process, not the result. That's how you build consistency. Tip 6, take breaks. If your judgment feels cloudy, if you're anxious or angry, walk away. Step outside. Breathe. Reset. Trading while emotional is like driving drunk. It's reckless and rarely ends well. Tip 7. Use meditation or visualization. Now I get it, this sounds soft. But listen, some of the most elite performers on the planet use these tools. Just 5 minutes a day to calm your mind. Visualize yourself sticking to your plan, executing without fear. It rewires your brain. It works. Tip 8. Practice in a simulated environment. Use a demo account. Apply your strategy. Build your confidence without the pressure of real money. You'll reinforce good habits that translate to live markets. FLEMO. Run this pre-trade checklist before you enter a trade. Ask yourself, am I following my trading plan? Is this setup part of my strategy? Have I calculated risk and reward? Would I still take this trade if I hadn't seen social media posts about it? Do I have a clear exit plan? If the answer is no to any of those, don't take the trade. It's not discipline, it's FOMO. And FOMO trades don't last. Upgrade your tools and mindset. Here's the thing. Even if your psychology is solid, clunky tools can ruin execution. If your trading platform is slow, confusing, or hard to navigate, it adds stress and kills momentum. That's why I recommend trading with a world-class, cutting-edge, user-friendly trading platform like crystalballmarkets.com. Whether you're a beginner or seasoned trader, their tech is fast, intuitive, and reliable. It helps you trade with clarity, not chaos. And if you want to sharpen your mind while you level up your strategy, check out the Crystal Ball Markets podcast. It's packed with beginner-friendly insights on trading, investing, macro trends, and financial markets. Hosted by experts who break it all down without the fluff. Add it to your rotation. You'll thank yourself later. Final thoughts. When the inner game, let me leave you with this. Trading isn't about being right. It's about being consistent. It's about having a system, managing risk, and staying emotionally balanced, even when the market tries to mess with your head. You can't eliminate fear, but you can manage it. You can learn to recognize it. And when you do, you'll stop letting it control your decisions. This game is mental. And if you learn to win that game, the inner game, the rest will follow. So, wherever you are in your trading journey, start treating your mindset like a core asset. Train it, track it, protect it, because the market will always be uncertain. But your mindset doesn't have to be. Thanks for tuning in to this episode of Financial Market Insights for Traders. If today's conversation helped clarify your thinking or gave you a new tool to use, share it with a fellow trader. And don't forget to subscribe so you never miss a deep dive like this. Until next time, trade smart, trade safe, and stay sharp.